What's going on, everybody? So today I'm gonna be sharing my trading strategy that I use every single day, and this strategy has allowed me to make money consistently from the stock market while also allowing me to know exactly what to look for on a daily basis. So it's very, very simple, and I'm gonna be going through this step by step here. Um, so yeah, let's just get straight into it right now. So the first step to my strategy is marking out key levels of supply and demand, and I start from the higher time frames and I make my way down to the lower time frames. But as you can see, like this is from today's price action, August 27th, Wednesday. So I'm going to be marking out supply and demand. So what I do first is I go on the 4 hour chart and I mark out the basing candle before a large aggressive move up. So as you guys can see here, we have a level of supply here. So I'll mark this out. Supply level here on the 4 hour. Um, I have a demand level here. So for demand, I'll mark the top of the body to the lowest wick. So this be a 4 hour demand. 4 hour demand here. And then I'll make my way down to the 3 hour. You can see on the 3 hour we have demand level here. 2 hour. See any supply? So I see a 2 hour supply around here. So I'll mark that out. And for this one, I just put lines just like this, only because, and I'll label them to like 2 hour. And the reason why I'll just put a line for this one is because um, I just don't want my chart getting messy, because you can see like this zone would cut into the 4 hour zone. So I'll just put a line there. Go down to the 90 minute. So I have an area, nothing on the 90 minute really. So down to the 1 hour. You can see I have a 1 hour level of demand here. It's not the best zone, but it's a decent one. The 30 minute, nothing on the 30, and down to the 15. So on the 15 minute, we see I have a 15 minute demand here, and also I have a 15 minute supply up here. So with that being said, I have all my levels here. And sorry, this should be a 15 minute supply here. So after I have all my levels marked out, I'll basically just wait for price to test one of these levels. So as you can see, when the market had opened, we came down and we tagged this zone here. And this zone was right at 75, 6475. So step number one, I would mark out all my levels so that I would have these zones and have levels of interest to then trade off of. Now, I don't trade if price is literally, like if price were to be somewhere here in the middle, I do not trade here unless price tags one of these zones. I stay patient, I wait for price to reach one of my zones, and I wait for a reaction. So step number one is mark out key levels of supply and demand. Step two is I wait for a level to get tested. So now that we're coming down into this demand level that I have on the 15-minute chart, what I would do here is I would go on to the footprint chart to see if I see any trap selling and strong buying stepping in to then get me into a trade. So if I go over to the footprint chart here, you guys can see the 75 level here is a 15-minute level of demand. So price had came down strong. We tested it. And if I play this for you guys in live time, you can see there's a lot of selling volume stepping into the market, yet the market is failing to move lower, right? So let me speed this up a little bit. Actually, I'll just leave it at, yeah, I'll leave it here. So you can see, let me pause it. You can see there was a ton of selling volume just now, yet the market failed to move lower. Then on top of that, you see that this strong buying volume stepped in and it pushed price all the way up. So what the footprint is telling me is there's a lot of selling happening at this demand level, yet prices failing to move lower. So there could potentially be a passive buyer sitting at this level of demand. And you can also see that there was an aggressive buyer that has stepped in right after the trap selling. So this is showing me that these sellers can potentially be trapped and getting absorbed, and the buyers are starting to step in. So this would give me enough confirmation to basically take the market long here at the 75s, 76s, and put my stop at the 73, 72. So I have like a three point stop and target, the pre-market highs or whatever the case may be. So that's kind of how I use the footprint charts. Let me see if I play this for you guys. And you can see there's a lot of volume here at the low. It closed with a low volume tail, showing that buyers were able to push it up with ease. And you can see, if I fast forward this 10 times speed now, you can see that the sellers are still trying to bring it back down, but these guys are trapped. And you just see the buyers just pushing price up. So, I mean, this is a great trade. I mean, entering at the 75, 76s, you're able to get a great risk to reward, right? You're basically able to spot these things happen before the reaction, or before price pushes heavily in one direction. You're able to see these sellers getting trapped and the buyers loading up. And obviously in today's price action, it took a little longer, but you can see, I mean, entering at the 75, 76s, having a stop at the 73s, and targeting even 86. That's a 10-point trade with 3 points of risk, right? So 3 points of risk here with a 10-point reward. So this is easily a 3R trade here. But yeah, so basically for the footprint charts, that's kind of what I would be looking for, and that's kind of what I saw on this test of demand on the footprint chart. Now, the fourth step that I would do is watch Bookmaps for any confirmations or clues that it gives me as well. So basically, while I'm looking at the footprint chart, I'm also looking at Bookmaps at the same exact time to see if sellers are getting trapped or absorbed at a level of demand and the buyers are starting to step in. And for a supply zone, it would just be the same thing but opposite. So for a supply zone, if we were to reach up here, let's say price went up to the supply instead of demand, we're at the supply, I would look for a lot of buy volume going on with no follow through and strong aggressive selling stepping in on the footprints and Bookmaps to short it down to the next level, right? So as you can see, I mean, entering at 75, let's say 76, having to stop at 73, right? I mean, obviously in a 5-minute chart it looks kind of crazy, but having to stop, like, go down to 2-minute, see a little better. So yeah, even even entering here at the 76s would have stopped at 73, and this would have never stopped you out because you would have gotten it on the way up. But even entering here and targeting the next level of supply, right? This was 10 points exactly, which was a 3.3 RR trade. And obviously even targeting the break of these highs up here would be even better, right? So like a 4.4 R, or even this next level 2R supply would be a 5.3 RR. But I would definitely take partials here at 10 points and then probably leave some runners to break these highs and get out somewhere on a strong push above these highs into the 2-hour. But basically, yeah, like, so step 3 is the footprint confirmations, and step 4 would be the Bookmap confirmations. So with Bookmap confirmations, again, I'm looking at this at the same exact time as I'm looking at the footprints. So you can see price came and tested, and what you can see here is price came down with a lot of sell volume. Even here, there's 205 aggressive sellers hitting the market. There's a ton of selling going on. You can see price pushed up despite all the selling, and we see a strong aggressive buyer step in. And we make a higher low And what I notice on here is there's weaker selling on this new low, and it's a higher low. So not only do I have more of a market structure type of pattern where it's like a double bottom, you see it's a lower low, higher low. And on these higher lows, you can see that the selling is getting weaker. So there's a lot of aggressive selling, then there's weaker selling. And on top of that, there was an aggressive buyer that has stepped in. So it continued to push up, and we start to break structure, right? Break this high. And this right here, triggering along at the 75, 76s, that's enough confirmation for me to get into this trade, right? So obviously I'm fast forwarding this 16 times speed, but you can see there's a lot of selling going on. They got trapped, buying stepped in, weaker selling, price pushed up, trigger along right here at the 75, 76, stop at the lows at the 73, and you can see this trade worked out, perfectly, right? So went all the way up to, obviously it would have almost took you out break even at 76, but you see if you stayed in the trade, took you up to 86 and even higher. So that is basically how I trade every single day. I just mark out levels, I wait for them to get tested, and then I use footprints, book maps to confirm the trade. And when I enter the trade, I make sure that where I'm placing my stop loss gives me a tight stop. So like a 3-point stop. Sometimes I have a 2-point stop, right? So having like a 2-3 point stop loss and going for 10 points, that increases my RR by 3 to 5 ish, right? So even having a 4-point stop loss with a 12-point target, that's still good enough for me to take that risk, right? So I guess another thing that I want to mention too is regardless of what my stop loss is, if it's 3 points, if it's 5 points, if it's 2 points, I'm always risking the same amount, right? So if I have a bigger stop loss, like 4 points, I'll probably size down a little bit. Usually my stop loss is around 3 points, so I size accordingly. But I make sure that every trade that I take is at least a 3R trade at the very least. So that is kind of like a intro, or like, basically just what I look for on a daily basis. Another thing that I want to mention is repeatability is key to being consistent in trading. And I'm just at a point where I wake up every day and I just know exactly what to look for. I know what works for me. And I was able to make a very, very simple checklist of things that I follow and look for on a daily basis. And when I see it, I just trigger a trade because I have enough evidence, or I have enough like pieces to the puzzle and context and clues for me to then take a trade and be able to label that trade, and I'm able to explain why I took a trade and basically say I took it for A, B, C, and D, right? And if you're taking a trade and you can't really list the reasons or list like a trading thesis, and you have no solid thesis to back that up, then it's probably a trade you shouldn't be taking, right? So I guess my biggest piece of advice is just having a strategy that you follow on a daily basis, right? Know what to look for every single day. Stay patient, wait for your levels to get hit, know exactly what to look for, and just keep repeating those setups on a daily basis. Regardless if you lose, you're gonna profit over a long term, and you're gonna see your equity curve go up. So that's all I have for today's video. It's kind of a quick video, but I hope you guys found it, very, very educational, and hope you guys learned something out of it. If you guys like this video, please like it and leave a comment, and I'll be seeing you guys more often.